And welcome back to Dukoscopy TV. Marc Saint John Webb, partner with Argos, joins us in the studio right now. Marc, welcome to the Dukoscopy studio.
Good afternoon.
Now we're going to be speaking about the family fund enterprise, as it were. Now markets, we know, can be volatile. Families not exactly always plain sailing as well. But what are the most common misrepresentations that you would say about this kind of fund and investing in this area?
Well, often when we talk about or hear talking about family-owned companies in the media, one sees the family members, one sees their wealth, one sees their lifestyle, one hears about conflicts between generations, conflicts between managers, and one hears about nepotism, incompetent management, and that is one of the images, one of the negative images people see. But on the flip side, there's what we see is fantastic companies that are family-owned, listed in Europe and have been going on for a long time with great track records in terms of growth and profitability, creating value for other shareholders. And here we can see a number of big European listed family-owned companies.
Indeed. Now, when we're talking about these family-owned companies, or the family enterprise fund, is it family in the traditional sense? I mean, how is it sort of represented in terms of shares, for example?
Well, we're invested in companies that are listed on European exchanges where a family owns at least 20% of the shares, and via its control of the shares, they also control the supervisory board, and therefore they guide the operational management of the company. But at the same time, what is important for us is the conservative long-term strategies that families tend to prefer, which is combined with the requirements of being a listed company, transparency, accountability to other shareholders, and of course liquidity from being listed on the market.
Okay, so we've talked a little bit more about the definition, as it were, what it really stands for, and also some of the misrepresentations. But to your mind, how would you sum it up? What is the real situation, and why are you so assured at Argos to work within this sector, really?
Families, because they control over 20% of the shares, have a majority on the supervisory board. And through this majority, they validate all the important decisions of the operational management in terms of strategy. And this will encourage the company to have a strategy that's prudent for the long term and ensure continuity. There's also, this actually ends up resulting in long-term conservative strategies, because the families have inherited the assets from their parents and expected to hand it down to the next generation, and are not expected to take risk with that asset. At the same time, these families need to have dividends to finance their lifestyle, and therefore these companies have to generate recurring dividends. And thirdly, it is very interesting for us to have the operational management overseen on a day-to-day basis by the supervisory board. So we feel that investing in these companies, our interests in terms of minority shareholders, are aligned with those that are taking the ultimate decisions in the supervisory board.
Well, with that all in mind then, Marc, perhaps you can tell us some of the success stories.
Yeah, we've been invested in a French company called Bic over the last years, which has performed very well. The company makes consumer goods, pens, shavers, lighters, and has particular expertise in making very high volume of products that have a very low price, and they tend to be the lowest price producer. The company was founded by Marcel Bic in Paris just after the war in 1946, and has been handed down to the next generation, his 11 children, and then their successive children. But if the supervisory board is managed or controlled by these 11 children, they have outsourced the operating management to an outside CEO who's been extremely competent and has risen through the ranks within the company. And this has led to a fantastic track record in terms of organic growth, of high operating margins, and has really generated a very good return for investors.
Well, yes, it does seem to be the kind of the compare and contrast in keeping it home, but also taking advantage of the external players and expertise, etc. But Marc, it's been an absolute pleasure talking this through with you today. Thank you very much for coming in.
Thank you.
Thank you. Okay, well, that's all from Marc and myself. There's plenty more coming your way at Dukascopy TV, so make sure you keep on clicking back. Goodbye for now.